Hey guys, what's going on? It's Rekt Capital. Welcome back to the channel. Has the Bitcoin bull market ended? That's the question on everybody's mind on this recent retrace, this Bitcoin dip. Bitcoin reached $58,000 and now it's pulling back. Is the bull market over? In today's episode, we're going to be looking at the new Bitcoin 4-year cycle, understanding where we are in the market cycle, in the macro market cycle. Where could we potentially pull back? What is the scope for further upside going into the future? So that kind of spoils the fact that we're not in a bear market. It's just a healthy retrace, because any pullback at this point in the market is going to be a healthy retrace in an otherwise healthy, sustainable, natural growth cycle. And Bitcoin is no different. All assets have corrections or dips or retraces. So I have already spoiled it at the very beginning. This is not a bear market, it's just a healthy retrace. And I'm going to be showcasing to you throughout this episode why I think that way. And I have tremendous confidence in saying that, because just by looking at Bitcoin's market cycle, its macro perspective, you can understand so much. And let's dive right into the episode. The new Bitcoin 4-year cycle is a newsletter that I wrote for free on the Rekt Capital newsletter, and it's actually part of a 4-part series about the Bitcoin halving's effect on price action. Feel free to check it out in the link in the description down below. It's one of the most detailed, in-depth articles I've ever written, and it will really help you understand where we are in the cycle, not only in the lens of the Bitcoin 4-year cycle overall, but just in the context of the Bitcoin halving. So much value there. But let's dive into part 4 of the series, and this is the Bitcoin 4-year cycle. And it really is relevant in the context of the Bitcoin halving, and I'll explain why in just a second. But first of all, I first started sharing my thoughts on the Bitcoin 4-year cycle back in March 2020, before we had the whole pandemic-induced panic selling, that extreme downside that we saw. So this is where the 4-year cycle really started interesting me. And I spoke about how we were in candle 4 in 2020. And of course, I made a video on this on YouTube, a couple of videos about the 4-year cycle. So this is going to be an updated version. So this was the 4-year cycle ending in 2020. And I was talking about how candle 4 needed to close above 13,900 for it to be able to rally to new all-time highs in 2021. So fast forward a few months into January 4th of 2021, we have an exponential candle 4 that closes far beyond 13,900. It breaks its all-time high of 20,000 comfortably and actually closes in the $30,000 region. So this candle 4, compared to the candle 4 in the previous 4-year cycle, which didn't eclipse its old all-time high, as you can see over here, this candle 4 totally did. It just showcases how this recovery in this candle 4 is way more bullish than the recovery, the U-shaped reversal that you tend to see recurring throughout time. This U-shaped reversal was so much more dynamic and explosive. And it just showcases how bullish we are, given how we closed $10,000 above the previous all-time high of $20,000. So really bullish price action here, showcasing how we actually deviated from history in some sense, because candle 4 was supposed to close above 13,900, at least in the context of this old cycle, of this 4-year cycle. That was 733. So candle 4 was able to do that in this 4-year cycle, but in this 4-year cycle we went even further than that. It just showcases that exponential growth and bullishness that we're starting to see, institutional interest and so on, really fueling this rally, taking it to highs that we haven't seen before, and also just changing the 4-year cycle dynamic a bit here into a more bullish one. So now that we're in the 4-year cycle, this is the new 4-year cycle, and I wrote this newsletter in early January. So I'm going to talk to you guys about, I'm going to update this just in a moment, but I want to just give you an appreciation of why these 4-year cycles matter, and it's because these blue vertical lines over here represent the halving events. Every 4 years we have a halving event which cuts the amount of Bitcoin that are created every 10 minutes. It cuts that amount in half, and every time we see this halving event take place, it always precedes a candle 1, right? You can see it always precedes a candle 1. And if you've read the halving series in the Rekt Capital newsletter, you'll notice that the halving is a major fundamental catalyst, a major fundamental shift in the Bitcoin protocol itself. And it's this shift that acts as a major catalyst for a new Bitcoin bull market and precedes exponential price action in the several months after the halving. And it precedes exponential price action in candle 1 in the new 4-year cycle. So before we talk about a retrace for Bitcoin, let's dive into the updated version of the new Bitcoin 4-year cycle. And if you'd want to read this newsletter, check out the link in the description down below. It's free and everybody can read it, so definitely check it out. So here's the most up-to-date Bitcoin 4-year cycle chart. You can see how Bitcoin has indeed appreciated since January. In the month and a half since I wrote the newsletter on the Bitcoin 4-year cycle, on the new one, we're at $53,000 at the moment, but we had that peak at $58,000 yesterday. So look at this wick, this upside candle wick, and just by looking at all these candle 1s in previous 4-year cycles, you can see that, of course, there may be a diminishing rate of returns over time. You can see that maybe it gets cut in half, not in half, but 40%, 30%, whatever the case may be. Even if we do that, you can notice how Bitcoin still has a way to go, even though we might have a diminishing rate of return. So just looking at this candle, you can see how very early on in the cycle we are. Because after all, it's only February and we've only just started this new Bitcoin 4-year cycle. So talking about it ending now after reaching $58,000 is a bit premature. We shouldn't rush to those conclusions because the uptrend hasn't even fully matured yet. It's only getting started in the grander scheme of things. You can notice how we've still got a ways to go, and this 4-year cycle has only just started. And the other way to look at this is that in 4-year cycles, in Bitcoin's 4-year cycle, each candle represents 12 months of price action. So essentially 1 year. And you can see how over time, there is a certain resistance that rejects price for 3 years. And it's this multi-year diagonal resistance over here, which candle 4 needs to close above just to confirm a breakout past this multi-year diagonal resistance. And we've seen the same thing here. A multi-year diagonal resistance breaking, rejecting price, resisting any upside for 3 years. Candle 1, candle 2, candle 3, rejecting consistently from this diagonal until candle 4 is able to manage a 12-month candle close above here and then propel itself into a new cycle, a new 4-year cycle, into an exponential rally upon breaking this multi-year diagonal. So we're going to see a multi-year diagonal like this form later on in the cycle. That's for sure. We're going to see a multi-year diagonal form somewhere later down the line. But the key thing to bear in mind is that if we cycle back to March 16th, 2020 tweet of mine, you'll notice how Bitcoin was in a triangular market structure for many years. And essentially what I was talking here, and this is a thread that I was sharing. This is an entire thread that I talk about even to this day. It's really interesting to see how I was analyzing the movements back in the moment and how we've seen these moves actually materialize over time. But this was the very first tweet in that thread. And it was in this triangular market structure. And the diagonal here, the diagonal of this triangular market structure is, of course, the diagonal in the 4-year cycle right over here. And you can see that as we fast forward, once the halving took place in May, that's when we started to break out from this diagonal, from this triangular market structure into an exponential uptrend that's led us to almost $60,000. So this triangle right over here used to be the triangle that I was talking about in early 2020. You can just see how we rebounded from the bottom of the triangle right over here and then rallied towards the upside. So that was really fantastic to see. And the reason I was able to do that also was looking at the market cycles over history. So this is another chart that I shared on Twitter where I was talking about this ascending triangle from 2019 breaking out. You can see that that's the breakout phase, and the pullback being the panic-induced situation we had in March 2020, which led to a retest attempt. Step number 3, a retest attempt of the top of this ascending triangle, which should have preceded trend continuation. And of course, fast forward through time, we rallied to $11,000. That was a trend continuation following this retest attempt. And of course, we've seen fantastic upside since then. So gelling all of these perspectives together, this pullback to the very bottom of this overall market structure, this triangular market structure, this pullback was essentially a retest of the bottom of this macro market structure, right? This retest being the bottom of that triangle, but it was also a retest attempt of the top of this ascending triangle. That was a accumulation range. So over here, that's the ascending triangle that I'm talking about in this chart right over here. So we retested it. So this retest attempt was the top of this ascending triangle, and at the same time, it was the bottom of this macro triangular structure for Bitcoin. And this diagonal resistance, this multi-year diagonal resistance of this macro market structure for Bitcoin was also the long-standing multi-year diagonal resistance that we have to break in candle 4 in order to enable a candle 1 exponential rally to new all-time highs and beyond. Really interesting to see how we layer all these different charts onto one another to give us a broader picture of understanding, and it's just fantastic to see how that just gels together. It really is something truly fascinating. So we've covered the Bitcoin 4-year cycle and how early we are on in this cycle altogether. So moving on to whether a retrace is possible in Q1, as I spoke about in the newsletter, well, we've already had that retrace in Q1, right? We've already had it. This is a chart from January 27th, 2021, where I was talking about these major historical demand areas for Bitcoin. These were areas to watch out for on the retrace for Bitcoin. So on January 27th, you can see that we were still maintaining the 30K region. But since then, of course, we actually wicked into this 29,000 region, right? And of course, what a rally happened later on. But the reason that I want to just showcase to you why it's important to focus on this $29,000 region is because if we cycle to the 4-year cycle perspective, this black region is 29,000. It's the top of candle 4. And if you cycle back to the old 4-year cycle, the top of candle 4 was also successfully retested by candle 1. Isn't that mind-blowing? It's just really cool to see this historically recurring themes just recurring throughout time. And of course, in the previous 4-year cycle, you saw candle 4, the top of candle 4, become retested by the bottom of candle 1 with, of course, some downside wicking. And of course, you didn't really see that much downside wicking in this candle 1. Some downside wicking nonetheless, but not enough like we saw back here, which only just showcases that buyers were so much more interested to buy on a Bitcoin pullback this time round than we saw this time round. And this long downside wick and the lack thereof of this downside wick over here is a testament to people wanting to buy on the retrace, because people are finding Bitcoin more valuable in this cycle than in this cycle. And that's demonstrated by this long downside wick. So is a Q1 retrace possible? Yes, I wrote that in the January 4th 4-year cycle newsletter, and we've already had that Q1 retrace. So if we see a retrace going forward, we're not gonna pull back into 30k. We're gonna see a dip later on this quarter, maybe. Check out the video where I talk about bull market corrections for Bitcoin, because that's where I talk about how the end of quarter one has historically seen corrections in Bitcoin's price action. So definitely something to pay attention to. But we've seen one Q1 retrace already happen, and we tend to see Bitcoin bull market corrections happen every single quarter, and at least one correction occurs, sometimes two. So don't be surprised if we see a pullback in Bitcoin's price action now, but at the same time, bear in mind that we are still very early on in the 4-year cycle for Bitcoin, and that any pullback in this early stage of the cycle is by no means a bearish event. It's in fact a means to an end to just jump on the bandwagon at a discount before enjoying further price discovery from Bitcoin as it jumps to new all-time highs later on in the cycle. A corrective period for Bitcoin is a small pause in an otherwise healthy uptrend, and it's really important to think about it that way, because thinking how to strategically make the most of a pullback for Bitcoin is the thought process that precedes profitability once the market recovers. And that's about it for today's video. Thank you so much for watching today. Please subscribe to the channel if you haven't already, and of course, like the video if you enjoyed it and want to see more content like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.